The headline that really struck me, Su-Lin, was that rate hike projections of 2%, that they could be raising that cash rate to 2% by the end of 2022. So potentially we're talking about 5 more 25 basis points hikes for in the next year or so. How likely is that scenario to you now?
Look, it's increasingly likely, I think, that rates will be rising over the course of the next 12 months, close to that 2% mark. So the RBNZ did lift rates by 25 basis points. I think there was some speculation that possibly it could have been a 50-point hike. When you read the statement, you look at their forecasts, it's clear this is an economy that is running pretty hot, particularly the labour market, and a tightening up of capacity there, considerable constraints, and inflation that's already pushing pretty close to 5%. So 25 was a done deal today. Possibly they could have done 50, but they are clearly signalling multiple hikes in the year ahead as they try and slow this economy and some of these price pressures.
Do we get to 2% though?
Look, I think it's entirely possible that we do get to 2%. It's looking at roughly a hike every quarter. 2% is closer to the neutral rate of cash in New Zealand. Right. It will probably go even higher than that. And so what we've seen in this policy statement today is an upward revision to the RBNZ's cash rate projections. They've been revised up about 0.5%. So 2% will not be terminal in their view. It's probably up closer to 2.5%. And that does seem appropriate for an economy that is facing the kinds of constraints and fairly high inflation already.
You pair that with the hikes that we saw before, plus some of these macroprudential factors that on the housing market. I'm just wondering, how much cooling have we already seen in the real estate market, and does that actually relieve some pressure for the central bank?
We haven't really seen an awful lot yet. And I think really what the bank is doing now is less about the house price side and really more about the labour market, the constraints, the price pressures that are coming through, and a rising inflation profile. So the macro pru is deliberately much more at housing and credit and house prices. It's being complemented really by a Reserve Bank of New Zealand that is lifting rates off its low levels back towards levels that are closer to neutral, and signalling a series of hikes really designed to, I think, take out some of the heat, definitely on the prices side, help moderate growth to some degree, and particularly on the labour market side. Now, some of these constraints are a bit out of the hands of the central bank, to be fair. We know there are, supply chain disruptions. We know New Zealand borders have been closed, and that's not helping on the labour market supply front. So there are multiple factors that are not helping here and challenges for the Reserve Bank. But it is pretty clear, given the starting point for inflation, the very low level of unemployment, that they do need to lift rates. And look, they're clearly prepared to do so, at most meetings over the next 12 months. I think what's interesting is markets already more than fully priced this in. Markets are looking for cash rate to move closer to 3% over the next couple of years. So it's very much in line with, what markets are expecting.
And just to get your view, New Zealand against the backdrop of the rest of G10, does it seem like they will be alone in terms of that aggressive move up, or do you see other central banks also needing to move substantially more than what we expect at this point?
No, I don't think so. I think it's pretty Sorry.
Go ahead.
Sorry, you're dropping out a little bit.
Hopefully
you can hear me. I think it's pretty clear.
Go for it.
Yes, I am. Can you hear me? Sorry, I think it's pretty clear the RBNZ is ahead of a lot of the G10. So they have, already kick-started their tightening cycle and pretty clear in their expectations of where rates are heading. So ahead of G10, leading the pack. But we would expect other major central banks to follow in the not too distant future. So the next one off the rank is probably the Bank of England. We are expecting them to lift their overnight rate there, which sits at 10 basis points by 25 basis points at the December meeting. We would expect the Bank of Canada to begin hiking in April of next year, and the Fed to follow in the second half. So we're seeing a very clear shift, I think, in the G10 central banking stance. They're all moving towards higher rates. The RBNZ is leading the pack here, and I think rightly so, given the pressures in their labour market and inflation that's already pushing pretty close to 5%.
So then real quickly, where you are, RBA then, how close are we to seeing rate hikes there?
So the RBA is probably the laggard here in that G10 space. The Reserve Bank is pretty keen on sending a message that they're still unlikely to hike until 24, even though they've dropped their yield curve control. When you look at their forecast and you listen to the communication, they are very reluctant to lift any time in the next couple of years. It's probably for them more a 24 story. We would suggest them that that's unlikely, that they're not going to wait all the way to 24, that within target inflation and some rising pressure on wages will suggest they'll start lifting in 23. So lagging a lot of the G10, but not as long as the bank would be signalling at this point.